Hey financial enthusiasts, welcome back to the Dividend Uncle, providing you with updates and analysis on a timely and honest basis. Today, we're diving into the world of real estate investment trusts once again, but with a specific focus on a recent development that's garnered a lot of attention. If you've been following the REIT market, you might already know about Digital Core REIT, a Singapore-based trust that owns and operates data centers around the world. It's sponsored by Digital Realty, one of the largest data center providers globally. Now, let's talk about the plot twist in this story. In February 2023, Digital Core REIT's second largest customer, Cyxtera, a global colocation and interconnection provider, was rumored to be headed for bankruptcy. This resulted in its share price falling by almost 40%. Last week, Digital Core REIT announced agreements that resolved the bankruptcy of Cyxtera, and the market seemed pretty upbeat, promptly rising by about 14%. So what does this mean for investors? This is an all-clear signal for Digital Core REIT. Before we dive into today's discussion, if you haven't already, please take a moment to subscribe to my channel. Your support means the world to me, and it's absolutely free. Now, let's get started. Cyxtera's bankruptcy and Digital Core REIT's response. If you recall, Cyxtera filed for Chapter 11 bankruptcy protection in the US in June 2023. This move was part of a pre-packaged plan to sell its business to Brookfield Infrastructure Partners, a global asset management firm, for a whopping $2.8 billion. Cyxtera played a crucial role in Digital Core REIT's portfolio, accounting for approximately 22.4% of its annualized rental revenue. They even occupied 100% of 3 shell and core facilities in Silicon Valley, 100% of 2 similar facilities in Los Angeles, and 4% of a facility in Frankfurt. As you can imagine, this bankruptcy sent shockwaves through the REIT market. But what's more interesting is how Digital Core REIT responded to this challenge. Lifting of the overhang, resolution of the bankruptcy of Cyxtera. In a strategic move that caught the attention of investors and analysts alike, Digital Core REIT announced a series of agreements aimed at resolving the bankruptcy of its second largest customer, Cyxtera. Here's a breakdown of the key elements of this resolution. Selling Silicon Valley facilities. Digital Core REIT has reached a definitive agreement to sell 2 of the 3 Silicon Valley facilities to Brookfield Infrastructure Partners for $160 million, based on Digital Core REIT's 90% interest in both assets. Affirming Silicon Valley lease agreement. The customer, Cyxtera, agreed to assume and assign to Brookfield its existing lease agreement with Digital Core REIT for the 3rd Silicon Valley facility, with no change to the terms, conditions, or rental rate of the existing lease agreement. Amending Los Angeles lease agreements. Digital Core REIT reached an agreement to amend its existing lease agreements with Cyxtera for 2 facilities. These amendments accelerate the lease expiration dates from February 2033 and January 2035 to September 30, 2024. But here's the kicker. Digital Core REIT and Digital Realty are expected to enter into direct agreements with the end-user colocation customers currently occupying the facilities upon the expiration of the amended lease agreements in September 2024. Cyxtera's in-place rent were below market and market conditions were tight with low vacancy rates. So this offers the potential to enhance the return on these facilities over time. This resolution not only addresses the immediate impact of Cyxtera's bankruptcy but also sets the stage for future growth and diversification. The resolution is expected to be accretive to the REIT's earnings and distributions, diversify its tenant base, and reduce customer concentration risk. Digital Core REIT, attractiveness and risks. Digital Core REIT is an attractive investment for several reasons. It possesses a robust balance sheet, with a low gearing ratio of 34.4%. With 72% fixed-rate loans. Its gearing may increase with the proposed investment in a Japanese asset. Normally you will see the Dividend Uncle complaining about REITs undertaking acquisitions which increase their gearing in this high-interest rate environment. But as I mentioned in the video on why Daiwa House Logistics Trust is an attractive investment, Japanese debt has an extremely low interest rates and the Bank of Japan doesn't seem to be in a hurry to increase interest rates, unlike other countries. So I'm quite satisfied with this move. But what makes Digital Core REIT particularly compelling is its positioning in the data center industry. The growing demand for data centers, driven by trends like digital transformation, cloud adoption, e-commerce, and 5G deployment, positions the REIT to benefit from these transformative changes. With a current dividend yield of 6.5%, it certainly sounds juicy. Here's the thing, While Digital Core REIT offers a lot of promise, like any investment, it's not without its set of risks and challenges. The data center industry is highly competitive and capital intensive, which means the REIT may face pressure from new entrants, existing competitors, or changing customer preferences. Additionally, this industry is subject to rapid technological changes and obsolescence, which may require significant investments in upgrading and maintaining its facilities. Moreover, the data center industry is exposed to various regulatory and environmental risks, such as data privacy and security, energy efficiency, carbon emissions, and natural disasters. Compliance with relevant laws and regulations in different jurisdictions could lead to additional costs and liabilities. The REIT's performance and distributions could also be affected by fluctuations in foreign exchange rates, interest rates, and tax rates, as well as the availability and cost of financing. If you recall, its interest expenses jumped by more than 300% in the 9 months to Q3 2023 financial reporting. So there you have it, my friends. The recent resolution of the Cyxtera bankruptcy is a significant milestone for Digital Core REIT. However, like any investment, it's essential to be aware of both its potential and the risks it faces. Staying informed and conducting thorough research should guide your investment decisions. If you found this information valuable, please give this video a thumbs up and consider subscribing for more updates. Thank you for watching, and I'll see you in the next one. This is the Dividend Uncle, signing off.